Good afternoon, everyone. I hope you are all having a great day and you are enjoying the little bit of sun that we've had today. um, so a little bit about me and my company. My name is Katie Brosford. I am the president and CEO of KB Accounting. I started my business about 2 years ago when I realized during my corporate job the need that was out there. I've had about 13 plus years experience in accounting, and I have my master's degree. So I just really wanted to be able to give back to everyone as they try and start their own journey similar to mine. So let's share and get started here. There is the Q&A feature available. So if you have any questions, feel free to type them in. I have the questions that everybody put when they registered. So I will get to those, whether I answer it during the webinar or afterwards. I will get to those to answer them to the best of my ability. So this, what you're seeing on your screen right now, or at least I hope you're seeing on your screen, is QuickBooks Online. This is a sample account that QuickBooks gives out for people to be able to do things like this. I want to first talk about the importance of categorizing things correctly. So not only does recording your transactions and everything help you know where your company stands and how you're doing and where you could be doing better, it also is good for tax time, because the cleaner you have your books, the easier it will be for your tax accountant to be able to do your taxes and cheaper for you. So you got to try and categorize it to the best of your abilities. So I wanted to show you first the neat feature that I love about QuickBooks Online, but is also one of the scariest parts, is the fact that you can connect your bank account to QuickBooks Online. And the reason why I say it's one of the scariest parts is because you, sorry, clicked the wrong button. If you only use this to categorize transactions, you're going to be missing some, because they're, they don't always include everything, and it will only include things that have been paid, whether it's a check or using your debit card, but it doesn't always sync everything. So it's extremely important at the end of the month that you reconcile it. And I know that's a long, confusing word for a lot of people, but when you think about in your world, in your house, you either do it daily or weekly using your online banking, or you do it at the end of the month when you get your bank statement. When you take the checks that you've written or the charges that you made and compare it to what chart went on the bank account, that's a reconciliation. So it's something that we all do in our daily lives, but it's really important that you do it with your company too, because then you can make sure that nothing's double recorded and that you've recorded everything. You didn't miss anything. I did have a client that double recorded all of her revenue, which I will go into that story when I start talking in the next section. So to connect your bank account, you just click on this link account here. And I haven't run into a local bank that doesn't work here. So if you were to just type, say, Greylock, it comes up right here. And then it's going to ask you to connect it. It'll ask for your online banking login, and then it'll connect. And when you're in this area, if you just click update, it will update and sync all the transactions. Again, sometimes it misses some. So you see where it says assign a category here? You can use this area to record a lot of your transactions. It's quick and it's easy to do that. You just click assign a category. And this is what I mean when I say categorize things. This is what the categories is what QuickBooks uses for a chart of accounts. So books by Bessie, say that's accounting. So you would look for accounting right here. And then you would just click confirm. It's that simple. So one of the questions, and this is a good time to talk about it, was about your chart of accounts. QuickBooks will start you out with a chart of accounts that is pretty basic and pretty good for a lot of startups. I don't know, what you'll eventually find is that you'll want to add things. Like if you're in office and you go through a lot of paper under office supplies or expense, you would want to add a paper line so that you can keep track of that. But mostly in the beginning, it's not a bad thing to be able to just use their chart of accounts. By chart of accounts, come on, where are you? It's right here. And this is what I mean when I say chart of accounts. So you have your bank accounts, accounts receivable, and then you have the rest of your assets. Depending on your type of organization, you might have inventory or prepaid expenses. Some of you may have a vehicle that your company owns and credit cards. That's where you would start with your liabilities. Liabilities, fancy word for people you owe money to, loans, things like that, and then your income starts. I personally like my income broken out, so like I don't record everything to sales. I record it depending upon what's sold: bookkeeping services, CFO services, payroll, projects, taxes. Those all fall under service income. I hope that helps a little bit with the question about the chart of accounts. So the next section I wanted to talk about would be the sales part. So customers are people that you either sell things to or do a service to, but they're the people that pay you. And here is where you would have your list of customers. It's important that if you're going to use QuickBooks for your invoicing, which I would suggest, I mean, if you're paying for QuickBooks Online, you might as well use all of it, that you put your customers in here and you put as much information as you use. So you would click new customer and you would enter the company name. I like putting an email address in because then you can send your invoices electronically. Then you have your address, their address, not yours. And then any notes. So if this is somebody who makes installment payments, that way it's one place where you go and you can see, and then you terms. If it's somebody that you want to pay regularly because they tend to be late, you would do on a receipt. Net 30 is what most bigger companies use. You know, you get a bill, it's due 30 days later, although lately they've been using net 10, net 15. And all that means is that it's due in 10, 15, or 30 days. And then you have a spot for if you want different types of customers, like if you want customers that you do, if you're a landscaping company, these are people that we just mow their lawns. These are people where we maintain their gardens. You could categorize them here. Categorize shouldn't be the word I use, but you could have different types here so that you could record them that way. And then if the service or the item that you sell this customer is taxable, you can check this and it'll always happen. If you're dealing with a 501c3 who is not a taxable organization, you can click that and then you can put in their tax ID information here. And then that way it's in your QuickBooks and you don't have to have it handy and you don't have to ask them for it every time. Otherwise, you would put what their tax rate is and then you click save. And now you're in that profile for KB Accounting. So you would see that there's no transactions. If you wanted to send them an invoice, you would just go to new transaction up here and go to new invoice. In here is where you will see that it came up with the net 30. So invoice date today, it's due 30 days from now. And here's the billing address where it would go. This is where the email would populate, and you can add a CC or a BCC. So like if you also want it to go to your inbox, you can put it in the BCC line so that you see it and they don't know that you did that. And then products and service is a whole different category in QuickBooks. That this is where you tell QuickBooks how to categorize the sales that you do. So you can see this company here is landscaping. So design, concrete, pump. I have bookkeeping, taxes, projects, CFO services. But you want as many as things you sell. And if you do something like landscaping and you want to sell, or in your buying materials, so the material is taxable, but your service isn't, you would want to put that in here because then it would calculate the tax for you, whereas your service wouldn't be taxable. So you could separate it. And then this also gives more detail because each line can be a new product or service, and then it'll give them one invoice and it'll be detailed for them. So we'll just go ahead and do one custom design, $75. And then we went and we bought garden rocks, which you can see is taxable. We spent $100 on garden rocks. And then if you want to preview, see what the client would see, this is how it would look to them. And you can see how they see the two lines. And then save and send, and it'll email it to here. If you don't have an email there and you need to print it and mail it, then when that screen you're just in, the print or preview, you can print it from there. So to enter the, I'm not used to using this form, to enter the oh, it's up here. Move that out of my way. Sorry. My picture is in my way. Here you can see all the lists, and this is where you can do the products and services. I went to the little gear icon and then products and services. And this is where you would add that. And this is what you use in an actual sales invoice. So if this is just a service, you click here and then bookkeeping, and then this is where you categorize it into your chart of accounts. So you would have it into bookkeeping revenue. And then you sell this to your clients, you purchase it from a vendor, or you sell it to your clients. Those are your two choices. If you purchase it, then it's we'll add this. If you want to edit the sales tax, and so the service is not taxable, so you click no. And then you click save and close. And now when you do an invoice, you just choose bookkeeping and it'll put it all in and categorize it correctly.